So if you are interested in following up and learning more, I know we got lots of questions. We're not going to have a chance to get to all of them right now, but that's why we have the gold sheet here. So please do indicate your interest in following up, and hopefully get some more time for some more questions. But we're going to bring up and continue the discussion with our panel on blockchain and crypto. So please again join me in thanking for the presentation here. And we'll go ahead and have Matthew, and we'll go and bring up our next round of panelists.
And as the panelists come up, Alex, Joe, and Bernd, let me just reiterate what I said at the outset. Yeah, what I said at the outset. If you're on the board of a company, if you have a family operating business, real estate company, whatever it is, or if you're an investor in one, and any of this is important to you, I do recommend you talk to Grain. And the reason for that is that, you know, I used to run AT Kearney and then Monitor and then Booz on the West Coast, and I don't come across too many partners, consulting partners, who can go from the big picture down to the specificity and the reality of how to make this work. And Grain, that's why we invited you, and I definitely think she's a great resource, so please do reach out to Grain. So now my panelists are coming together. We're missing Joe. Could one of the team go out and rustle up Joe? There he is.
Sorry about that.
And you guys aren't mics. Do we have another hand mic that we can use? Yes. Let's give the panelists mics. So you're going to hear more from me later today. So suffice to say, you already know I'm one of the 3 general partners of Keiretsu Capital, and I'll be telling you later on today about our own blockchain fund of funds and what we're doing with that. But for the purposes of the next 45 minutes or so, I'm the facilitator. And this session is not to repeat what Grain just did. So this session is about practical investing opportunities and advice. And so the hat we're now screwing on is whether or not you believe what you just heard from Grain. If you did want to think about investing, what would some of the options be? And what would some of the best practices be? So that's what this is now about. So I'm going to first ask the panelists to introduce themselves, and we'll actually start from the far end and work this way. And then I have 4 or 5 organized questions that I'm going to ask each of the panelists, and then we'll go to Q&A. So Bernd, why don't you introduce yourself?
Certainly. My name is Bernd Petak. Can you guys all hear me? Just make sure the mic is working. Fantastic. I started off as a deeply technical technologist. I have a computer science math undergrad and have the good fortune to get that from the exact university where much of the original public key cryptography research was done back in the late 70s, and they wouldn't let us graduate if we didn't help with that research. I thought it was the silliest technology ever, and I just wanted to get it over and done with and out the door. After that, I spent some time as a technician and as a developer. I went to business school, eventually became a partner at Deloitte, where I was for 10 years as a management consultant, doing much of the same stuff that Grain is describing she does. I left there, went into founding early stage startups in a variety of areas, specifically fintech, money handling oriented, and so on. Went from there to venture capital, and now am investment partner with our own small 3-person micro venture capital firm. It's very high touch. It's called Northmark Ventures, and maybe I will get to the details of how we work because it's very closely related to the topic at hand as we go through the questions.
Thank you, Bernd. Alex?
Hello, my name is Alex Fedosiev. I started in the academic world back in 1990s, working my PhD in artificial intelligence and unstructured data that now everybody's calling big data. In 1996, I moved to California and was in broadband, telecom, smart home, Internet of Things space, and lucky to have 3 successful exits. 3 companies were sold, where I was usually responsible for product management, combining technology and some standard work. Like for example, Tuai was sold for 475 million in 2010. The next company was sold to Motorola, which became part of Google in the smart home space. And since 2011, I started my own company to combine technology and social science, because I really believe that internet is the next big area where you can succeed together by building great services. And blockchain is my focus for the last 2 years, since 2016, because I totally agree with what Grain said and Matthew, you indicated already. this is the next. It's even bigger than .com. We have a lot of reasons to believe so. So I think in my case, in media tech, combining the big data collection, blockchain is perfect tool to do it right. And I'm a huge believer of cryptocurrencies, and a lot of things you just heard here. I've been through it last year by doing ICO for my company, raised 11 million, and now we're building a real token economy. And I think it's not just about technology anymore. It's a lot about changing the relationships between companies, people, and government. Decentralization is a big thing. So forget about Bitcoin and cryptocurrency as just one part of it. It's all about the token economy and new relationships. I think that's what we need to talk about and be prepared for.
Thank you very much, Alex. And if you didn't guess, Alex comes from the home of the best social artificial intelligence data scientists, quite a long way east of where we are today. Joe.
Yes. Hi, everyone. My name is Joe DiPasquale. I'm CEO of the first crypto asset fund of hedge funds. So there's about 200 different crypto hedge funds. And in 2017, I started BitBull Capital to diligence those funds and choose the ones that we believe are of the best quality and will perform the best in all sorts of market situations. So it's active management. I got into this space because I have a background in asset management. I worked as an analyst for a long-only equities investment management company in New York, then moved out to Silicon Valley. I went to business school at Stanford, but graduated in 2006 and went into the venture capital in the tech space. Started investing in blockchain crypto assets in 2013, right after in San Francisco when the Silk Road founder was apprehended in San Francisco Public Library. Bitcoin crashed. I was lucky enough to get in at a low and then diversify my assets. And I'm a big proponent of active management in crypto assets. Because we've seen many different types of markets and months where they're up a lot and months where they're down a lot. So I became an evangelist for the crypto asset space. I have an alternate personality called Crypto Joe on YouTube where I interview technologists and investors. Kind of out of becoming an evangelist, people would ask me, what would you do with your money in the crypto asset space? And for my own investments, I was looking for a diversified portfolio of different types of strategies, concentrated long strategies like ICOs, and also less risky strategies like quantitative strategies that will do well, that are market neutral. So that's why I started BitBull Capital, to kind of create a basket of different types of token investments, not equity investments, but rather token investments that are shorter term or a little bit opportunistic in a way, and that's what I do at BitBull Capital.
Thank you very much, Joe. For full disclosure, Bernd and I are fellow Keiretsu members, but we don't have any cross-holdings that I'm aware of. But I am a long-term investor in Alex's business, One World, and I'm on the advisory board. And I'm also a limited partner in BitBull and advisor to Joe's company. So just for full disclosure on that. So the first question that I wanted to ask on all of our behalves is, as families, you are given a lot of advice from a lot of directions, and most of you will be encouraged to put your assets into public markets, fixed income, and real estate. And we know those returns. The long-term returns of fixed assets is close to zero. It's 1 or 2%. Of the public markets, it's 9 or 10%. And real estate, depending upon where you are and how much risk you take, can be a lot more, or obviously it can be less too. So that's what we have the bulk of our assets in, and I think most of the families in the room probably have 90% of their assets in those buckets. So I want to start off just talking about the returns, and I know there's a lot of issues about how you measure them and paper gains and all this sort of thing. But Bernd, give us a sense. Last year, what were the returns that you saw in your investments or in your portfolio in this blockchain cryptocurrency space?
My favorite question, because the answer to that is zero. And we're very proud of the fact that it's zero, and it's very important to us that it be zero because of our particular investment thesis. We are in many ways the very opposite of what Joe does, which is exactly what you want as investors. You want options at both ends of the spectrum. I am Canadian from Vancouver. My partners are from Yukon. Yukon is where the Yukon Gold Rush happened. We like to think we know a lot about making money in a gold rush situation. And in those days, the way to make money was picks and shovels. The way to make money here is platforms and protocols. And we treat investing in this space exactly the same way that in past years we invested in everything else in the technology space that we're comfortable with. And that means we have a 5 to 7 year investment horizon. And we're very, very cautious and very concerned when someone promises us a return sub 1 year. When it does happen, either we speculated, which is against our thesis, or we got lucky, which is not repeatable. I'm happy to report that neither of those two things happened for us in 2017. We're very happy with the future prospects of our investments, but it's too early to say that we made investment returns. We did make money in other ways out of crypto.
Thank you very much, Bernd. Alex, how about for you?
Yeah, so my personal investments always were done in the companies that I was part of, and I never lost my money. That's the question was asked earlier today. Now, regarding last year, we did an ICO, and one of the techniques that we decided to use is not only accept fiat or traditional money and Bitcoin and Ethereum, which are, as you know, the most popular, but we also accepted the tokens from other companies. And we carefully selected a few that we consider to be high quality. We looked at the legal, technology, business model, and especially token economy. Just see it's really viable and have good community, good use case, and very clean mechanism. As mentioned in the earlier presentation and what described in the white paper, we selected 6 companies, and we did what I call token swaps with them. So essentially, we traded 1 million of one world tokens worth $1 million for the 6 other companies worth the same thing. And it turned out that already 2 out of 6 companies we traded definitely growing very fast. They used to be one at 5x, another at 4x of the initial price. So we essentially turned 2 million to 9 million in literally 2 months. I'm not saying this is something you can cash out and use it for your operational needs, but at least on the books and on the, it was liquid actually, because both of these companies are trading on multiple changes. And even after the correction that just happened, it's still looking more like 5 million out of 2 million on the books. And I think that's the strategy that we want to continue, invest in early stage ICOs after very, very careful due diligence.
And we may come back to that issue. One World was a Keiretsu-backed company, and overnight it's actually become a portfolio of ICO holdings with a very large balance sheet, as well as being an operating business, which was very creative of Alex, and we're very thankful you did that. Joe, what about you? What did you see last year?
Absolutely. And I agree with that. Alex makes a good point that a lot of these ICOs are liquid, or tokens are liquid. They're all on exchanges with up to the minute pricing. And even Bitcoin has more than 10 billion that's traded per day. So there's a lot of liquidity in the markets that people don't, that's not generally assumed. But to answer your question, Matthew, I'll talk about actuals just to give you guys a sense of what BitBull seeks. So Bitcoin itself did 1,400% in returns last year. So 100K in the beginning of the year would have been 1.4 million at the end of the year. For our for our funds, their average return was 3,800%. So it's not as high as picking the winner of the year and putting kind of all of that risk into one asset, like a single company or coin. But it's what we're aiming for is to have the highest risk-adjusted returns with liquidity as well. And so that's kind of what the BitBull basket seeks to do, is to provide high risk-adjusted returns through a diversified portfolio. What I think has been an interesting trend is the recent market. So we saw down months even last year, right? Even in this bull market, September was a down month after China outlawed mining, and then we saw months like January and February. So it's been very interesting on the BitBull side to, I guess, as opposed to what Bernd was saying, to, like, you're right, there's opposite sides of the spectrum where we are being a little bit opportunistic, and we're saying, gosh, there's all this volatility in the markets. How can we use strategies that can profit even in sideways or volatile markets? And so we are opportunistic in that way, and we do seek short-term, even short-term gains.
Okay, thank you very much. So that gives you a sense of 3 experiences. We're going to double down and double click into this to understand better what exactly these people do. And so to kick that process off, the second question is, give us an example of a specific investment you have just made or you're about to make, and just tell us a little bit about your thought process around that investment. And let's keep this to like a minute or a minute and a half, but Bernd, why didn't you begin?
very easy and fantastic current example, CG Blockchain, Manhattan, provider of compliance and trading solutions to the hedge fund space. That is an organization I was personally introduced to. I did my own due diligence on some of the individuals. A gentleman named Bob Bonomo, who was with Oppenheimer Funds and others, is the head of that organization, someone that I've gotten to know and have a lot of respect for. I became a personal advisor, not on the ICO side, but on the operations side, specifically in their relationships with the big accounting and consulting firms where I had experience. When it became obvious that there was a potential fit there, I got off my butt on my dime, flew to New York, and spent a bunch of time in the office and met their team. And this is where I think due diligence takes a different form in this space than it would in the other investments that we've made. You absolutely have to see things with your own eyes. You know, Google is not your friend when it comes to doing due diligence in this space. So we were there. The way our model works is we will never invest without a significant, proven, pre-existing, mutually respectful relationship. For us at Northmark, that normally means a commercial relationship first. And that's where we are with CG Blockchain. We've been there for quite a period of time. We've made active participating help in getting their 3 products out the door. And we're in the position now where we're happy and comfortable to invest. But that's what it's taken us to get there. So.
Thanks, Bernd. Alex?
Yes, Matthew mentioned now OneRule became a company with the operational business, but also a holder of tokens of other companies. And we have enough funds now to make another 5 token swaps. And we created our shortlist, which is about 10 companies. And 3 of them we definitely want to move forward. So just an example how we select the companies. I'll give you one example. There's a German company with a Finnish founder called InToken. And I was watching them actually for quite a long time, even before they announced ICO. I didn't know they're going into ICO because Mick is one of those visionaries of blockchain community in Europe with a very strong vision about where the industry is going and how actually monetize blockchain by creating great value. So he's essentially taken on LinkedIn. He's creating artificial intelligence powered and blockchain based network of people that allows to do B2B referrals. And I think that's #1 use case of LinkedIn, which they don't do, right? Right now it's become almost a useless file of information about people only for HR purposes, and there's no real use cases. And they building it, and they have a reference already created in 3 years with a good, robust model. So we agreed to do a 1 million swap and bring in some additional capital to participate in the ICO at a very early stage. I negotiated the deal before it was even known to anybody that they go into ICO. So that's an example of companies we select them very carefully. And of course we watch for the founder, which somebody said earlier, that relationships and trust is very important. So it's got to be charismatic, real leader who's willing to spend years and years to build a successful business. But then of course robust token model and a good team.
Thank you, Alex. Joe, you're in a slightly different category because you're investing in other funds that are then making their own investment decisions. But why don't you give us the same answer, recent investment and your process?
Sure. Well, you're exactly right. It's a little meta what we do, but I'll talk about some investments in funds. And one interesting trend that we've seen at BitBull, and we do publish this research on our site. Password is BitBull, so where we look into funds. And one trend we've seen is in the past 3 or 4 years, there are crypto funds, hedge funds, going back as far as about 4.5 years. One interesting trend is that it used to be hedge funds that were started by ex-venture capitalists, so these directional plays. Now we're seeing the rise of the crypto hedge funds that are started by hedge funders, so the Renaissance or Two Sigma type of funds. And so we've made 2 recent investments. One is in a fund led by a guy who's formerly of Tiger Management that uses quantitative strategies and applies machine learning type strategies to buy low and sell high repeatedly given the volatility in the space. And another is an Asia-based fund that does heavily arbitrage. So in crypto assets, there's more than 1,500 different crypto assets. Bitcoin's one of them. And there's over 8,500 different exchanges. And every asset is a different price on every exchange. And you can see differences of up to 10%. So this is the Asia-based fund is one that we're considering for our next allocation on April 1st. And they have some really impressive returns on their arbitrage strategy.
Thank you very much, Joe. So I'm already hearing some common themes, but I'm going to ask you that explicitly, which is, when you think about your investment thesis, can you distill your individual investment thesis in this space down to a few words that you would want to share to the audience.
I have this little term that I personally use and that my partners have adopted called bolt-on blockchain. Bolt-on blockchain is the inappropriate use of this technology for something that it doesn't add any value to do. So the very first thing we do, and what I suggest that each of you do, is look at the underlying business, both the monetization model, the product, the target market, and everything else, all the stuff you would normally do, and ask yourself, is this concept better off using blockchain? I think we had a great presentation just now about what the advantages of it are. Ask yourself if that's the case. Ask yourself if this is a pump and dump. Does it look like, and is it being presented as something that's going to make money fast? We personally stay away from those kind of things. And we ask ourselves, with a great founder and a great team and 5 years of our support and the others that we might bring to the table, is this going to be an absolutely amazing must-do business that maybe no one talks about but everyone spends money on? And if the answer to that is yes, then we would consider that a good candidate. And that's one model. There's much more to it in terms of what we do, but at a very, very high level, that's our approach.
Thanks, Bernd. Alex?
Yeah, it's hard to say in one word, but I say early stage with a solid token economy and verifiable, because a lot of claims, completely agree, pump and dumps are very common. That's why real companies sometimes hard to distinguish from the rest. But we approaching it with a couple of techniques. One is called essentially sandbox, same as in development, when you can actually test the prototype or the functioning product and see it's in action and see it meets certain basic criteria. So that's something I'm developing in my team, to look at these ICOs more closely, not just take the claim verbally. And yeah, early stage is very important because that's how money are made. Because when you join an ICO when it's public and it's going through small discounts, anywhere between like 5 and 25%, this is not very interesting. When you come in early, when people need us, right, to support them at very early stage, you can do a big amount and you can do an amazing discount. That's what I found. That works.
Thank you very much, Alex. And Joe?
I guess if in a few words, I would say risk-adjusted returns. So we're very at a diversification. So we really look for these market directional opportunities as well as market neutral opportunities, and we aim to give people a large portion of the upside and a small portion of the downside. So I guess another catchphrase might be downside protection, where we've seen these months like January where Bitcoin fell about 30%, or December where Bitcoin was up about 40%, and we try to give people maximum amount of the upside and a minimum amount of the downside through those months.
Great, thank you very much. So I'm going to make a couple of comments at this juncture. I'm going to ask them one last question before your questions. And because we're all friends and you're all accredited and we know all of you, there's no general solicitation risk here. So the last question they'll be asked is, if you want to participate in their value creation opportunity, how would that work? But before we get to that last question, I want to just make a simple observation, which is what I heard them say, we all know already. And that's really important. We all lived through the dot-com boom, and whatever your stance was in that time frame, I remember I was the head of strategy and the head of marketing at Gap, and I was sort of very busy, and I missed the opportunity to some extent. I was in San Francisco. I really didn't do as much as I could have, but I was there, and I observed it, and I heard it, and I didn't understand it. I was very confused when I sat in BCG events where they tried to explain eyeball-based valuation. And I'm a valuation expert from the McKinsey Corporate Finance practice. I didn't get eyeball-based valuation. So I don't get network-based token valuation either. So we were there. And so I'm spending a lot of my personal time, as I think about how to invest Alison and my money, trying to remember what were the smart strategies of the dot-com era, and am I doing them now? And the words I heard you say, which is trust, personal relationship, know the founders and believe in them, see the big opportunity, believe that it could happen, do your due diligence on all of the dimensions that you should, diversify and place a number of bets, plus potentially give money to the best in the space. Anyone in this room who was a friends and family investor in Draper, Andreessen, or Sequoia in '96 is still investing with them today. By the way, if you were one of the first guys into Buffett, you're still in Berkshire Hathaway, you're still there today because they never kick you out. But the problem is, if you show up 10 years or 5 years later and you want to be in the best funds in the space, the doors are slammed on you. They don't want your capital. So anyhow, I heard you say things that I know everyone in this room knows, and I think that is our challenge. Our challenge is to go back to first principles, remind ourselves of how money was made in the past in fast growth emerging technology spaces, and use those proven strategies into this new space too. And there are some subtle flavors such as ICOs become liquid quickly. Do you take the money or do you hold on? Those types of issues are new and unique, but much of this is the same old, same old. It's emerging technology. So now the last question, this, you don't have to worry about general solicitation. Everyone's accredited. We know everyone in the room. So Bernd, if someone wanted to play with you, based upon what they've heard, how would they get started?
I, first of all, never give investment advice. There's professionals that do that. All I can tell you is what we're doing. And we're all in on CG blockchain. That's the one investment that I can talk about because it's public. If you're interested in connecting with that, if you're interested in compliance solutions for hedge funds, and there's huge compliance problems there. If you're interested in crypto trading solutions connected to those compliance solutions, they have an ICO open. I can tell you firsthand, I literally probably came on the same plane as Grain from New York yesterday. And I can tell you there's a very, very diligent team working very, very hard there with fantastic intentions to do very well with the products that they're introducing. Come and see me, I'll happily introduce you. We will not get anything out of that, but we're happy to introduce you.
Thank you very much, Bernd. Alex?
Yeah, first I would like to amplify what was said in the previous presentation, that definitely want to welcome everybody to ICO cryptocurrency. That's a new exciting world, and Matthew is absolutely right. You don't want to miss out, because that's how money are going to be made in the next decade, and nothing comparable to traditional investments. That's my personal belief. So first and foremost, yeah, join the revolution, because it's happening, and we just enjoy the results ourselves. And many people around me, they enjoy the results, because that's become my regular world, people that are living in this world already. Second is, if you're interested in my company, there's still two options, both participate as a token holder or equity investor. So it's always an option there. And I'll be presenting the company pitch tomorrow at the expo. And also the third option is to join a fund that is invest in ICOs in addition to equity, or just in ICOs. Because I think that's a great way to diversify investments. I encourage many of my friends do. They keep coming to me actually asking to invest their money. And I try to be very responsible, but they do want it, right? So why not? That's why the fund that we're creating, probably going to be called Blockchain Generation, where we're going to contribute our tokens, which is now exceeding 10 million. And we want to bring some other fiat and crypto money into this fund with a great pipeline of top entrepreneurs. I would like to invite you as well. So many, many options. It's just a matter of if people want to experience the new world.
Thanks, Alex. And Joe?
Yeah, it's interesting because we talk to family offices who are definitely curious about crypto assets. And it's not for everyone. It maybe is for that type of investor who does angel investing or venture capital like investments or hedge funds. So we are, as a fund of funds, we're a hedge fund, right? There's a 1 in 10 fee structure that we have for the active management for providing good returns throughout down months like January and February. I guess what I would say is, as an investor, if you have an interest in blockchain, one of the interesting research pieces that BitBull did and published was about what it would have looked like if you were 100% in the S&P last year, which is you would have had about a 20% return, versus 99% in the S&P and 1% in BitBull's basket, where you would have had about a 45% return. So you can see a small diversification creating a lot of upside. Now, BitBull's position is not that crypto will do the same returns that it did last year, but it is that there's no evidence that crypto asset markets are efficient. And so that provides a large opportunity for active management strategies to outperform. So there are few hedge funds that it's right now active management strategies. It's really like shooting fish in a barrel. So we're just providing access to, as Matthew said, closed funds that are already closed. By the way, we're in 2 funds that are closed already, and funds that have very high minimums. We try to do that with a low minimum.
Thank you very much. I've noticed Nathan behind me. I think we have a few minutes for questions. Is that okay? So let's go to Q&A on my right. And you'll have to speak loudly. I'll repeat if I think people can't.
Not a problem. So obviously, I'm a firm believer that blockchain crypto is going to be a huge generator of jobs. I mean, you look in areas of like Iceland and in certain areas, even like northern New York on the Canadian border, where there's a lot of companies that are going there to mine Bitcoin and other cryptocurrencies. As the technology expands and more cryptocurrencies kind of come into the marketplace, do you feel like this has the potential to dilute the current market balance or create even more volatility in the marketplace?
Okay, so let's do the second half, which is, does cryptocurrency generate greater volatility in the asset markets, the investment markets? The first point about job creation, let's not talk to. So are we entering into a world of increased volatility because of the creation of these new technologies? Whoever wishes to go.
I'll make one particular comment. This is a new asset class. That new asset class is absolutely taking dollars away from other asset classes. There's no question about that. Some of that is going in here. I don't see them tied together in a really tight way. I think this is all good from an investor's perspective. We're all investors here, and we have access to something that's new, that's potentially significantly counter-cyclical with some of the other things that we may have our money in. And I just don't see the connection that you're afraid of. This is my opinion with a big fat opinion warning.
Anyone else?
I just want to address volatility a little bit because everybody is thinking about volatility of crypto assets. That's a huge concern. But the solution is very clear, right? As soon as regulations will be established, then SEC will stop fighting CFTC, and we'll have a good conclusion about exactly what is commodity, what is security, and how to regulate them. The volatility is going to reduce for sure. Because right now the whole world is scared about what's going on in the US government, and many companies stopped doing ICOs in our country. Many of them are outside. They don't accept U.S. investors, which is embarrassing. That so much appetite here, but they not welcome to ICOs. So as soon as we'll be settled, I think volatility will reduce. And we've observed it already. When there's no statements from the SEC, Bitcoin and Ethereum are still major indicators are kind of stabilizing. As soon as SEC makes the next move, then everything goes down, like the exchanges announcement recently, right? So volatility going to normalize over time, and there will be definitely, as mentioned, some flow of capital between different markets, but it's normal, right? And will stabilize over time. I think that's going to happen, like any other new asset class.
Thank you. And
it's very much like angel investing in these 1,500 different crypto assets. More are being created every day. We're seeing so many parallels between the standard startup market and crypto assets. And how do you invest in the Amazon.com and not the Pets.com is what a lot of our funds think about. Although, by the way, Jeff Bezos was a large investor in Pets.com as well, so his diversification worked out. We've been heartened in the active management space about the volatility. Like, we love that Bitcoin in the last week went from 11,000 to under 8,500. So we hope that even through the launch of futures on the Chicago Mercantile Exchange, the NASDAQ, that the volatility will continue.
I'll just add one thing to this, and then we'll maybe take one or two more questions. But as Americans, Canadians, we're probably the least able to understand the importance of what's going on. And the reason for that is because for most people in the world, their currencies are not secure. They face hyperinflation, devaluation, expropriation, corruption. They can't trust their banks, and they may be in a wagon leaving town tomorrow with a guy taking the gold off them as they cross the border. So for those people, the currency and asset components of this are quite revealing and unbelievable, that they can take a number, send it to a friend, and know that their families will always be safe and will always have a monetary legacy, which, generations of people, many of your forebears, had everything taken from them when they came to America. So that's one point. The second point is for the software. We also don't really get that. We use cards. China doesn't use cards anymore. You know, they use electronic means of payment settlement, Alibaba, WeChat. They don't use cards. They're getting rid of all of that. But from a payments and a financial perspective, because we are so large an economy, we're actually not a very sophisticated and future-leaning economy. But when you're in Kenya, I know it's the example that's always used, but when you're in Kenya, BigPesa allows people in a marketplace to transact at essentially zero cost in real time. And we are wealthy people. We don't mind losing 2 or 3% of everything we spend in the transaction processing system, but when you have no money, you care. So I use these as examples. When you ask a question like volatility and you come from an American perspective, volatility looks bad. But when you're in most of the world, you live with volatility every day, and your lens on this type of volatility is very different. So maybe one more question at the back.
So if you looked out 5 years from now, how many different coins do you think there will be on the market, and how many of the current 1,500 will still be viable?
First of all, I'll give you a blanket description of what I think 5 years from now will look like. We will not be having discussions about blockchain. We will not be having specific discussions about crypto in this unusual, magical sort of way. It will be like the internet. We don't talk about TCP/IP anymore. It has just become the norm, and it's become a part of our financial lives and everything else. So that's the first thing to remember. If you ask me, those 1,500 that exist right now, very few of those will be around. This will always be a rapidly changing space. Businesses come and go, and therefore the unit of value to buy the asset of that business, in the case of a utility coin like a token, is going to come and go. And that's normal, and we're going to have to get our heads around that. We're not building things for the ages here. We're building things for the period of time that customers are interested in it. When they're not, it's time for us as investors to move on along with the entrepreneurs and teams. That's my thoughts.
Thanks. Other comments?
Yeah, my view is actually we have to look differently at this picture. Instead of many individual coins that people need to remember and operate, there are going to be some meta services that are going to combine it behind the scenes, so we don't need to worry about it. You probably know about some initiatives like in Europe, especially Naga and LBX, and some other services that provide combination of fiat, crypto, and other virtual assets into one seamless experience. You have one card, and everything is happening behind the scenes. So I don't even need to think about these tokens. Like today, we can use miles, which is essentially a token, right, or US dollars to pay for our trip. So eventually it's going to be the same, but many of other tokens that can be used in a variety of ways, seamlessly behind the scenes. Unless a few very specific ones we're going to use deliberately, like Telegram, Gram, I think is going to be huge. If somebody is not using Telegram, please install today. You will experience the whole new world of how business is done. And now with the automatic wallets coming soon, yeah, that's type of experience I mean, because the wallets are going to be unified.
Just a couple comments. So one of the things I'm excited about is I agree with the answer that few of the existing assets will be around in several years, but I actually think there will be more than 1,500. It's like startups. This is a new exploratory space. One of the things I'm excited about is the few $1 billion that have been raised in ICOs was essentially like the Series A of the blockchain space. It's just now that people are building more useful blockchain products, doing marketing around them, and many of the products aren't even launched yet. There's a lot of promise, and I know some of the spaces that we at BitBull are excited about because we hear opportunistically from a lot of our funds about a lot of the exciting investments that they're making. One is stable coins. So if you think of a cryptocurrency like Bitcoin, any volatile asset is not good as a currency. You either are losing money by spending it, or yeah, I guess you're on the losing side either way if it's volatile. But there are other things. So people are creating stable coins that are more stable, that actually can be used as a currency. Another area that we're very excited about is all the payments coins like Ripple and Stellar. I think if you think of, you mentioned data burned earlier, which is really, it's like the oil of technology, right? There's so much that you can get from data, and of that, the highest quality oil you can get is this payments information. So we're very excited about the payments data that's being provided through the block, or that's being created through these blockchain coins. And there's so many industries that the blockchain is disrupting, like payments, like currency, like file storage, like digital identity management, where I think there will be 1 or 2 or 3 winners per space. So we'll see few of the assets winning, but it is about calling those winners, in the markets.
Great, thank you very much. I'm going to just make a couple of closing comments, and then we'll thank the panel. The audience is about half angel investors and half family offices. So for the angels, the venture capital failure rate is between 50 and 60%. The angel failure rate is almost exactly the same. We as angels are in the business of taking risks, and we fail much more than we succeed. What's different about this space is the return right now is an order of magnitude higher than we normally receive. So it's not so much that the risk is high, though I think it probably is. The point of this conversation is the return so outrageously high in this time frame. And as angel investors, we are in the business of trying to ferret out those new technologies and opportunities. For the family offices, you're here because you or someone in your lineage took risk. And I think you owe it to the future generations of your family to continue to take risk. And if you've lulled yourself into the mindset that you're here for preservation only, then I personally would encourage you to question that. Families were created by entrepreneurs and risk takers. Please join us in taking risk and in funding the future. Thank you very much.
Thank you very much, Matthew. Just encourage everyone to fill out their gold sheet if you'd like to follow up with any of the panelists that were up here for our block.